Good morning, guys, and welcome to the Camp Financial Stock Market Update for January 17th, 2017. Um, so, before we even jump into the markets and what happened last week in trading, I have one specific stock I wanted to talk about because we actually talked about it last week, kind of in connection with another uh, stock, and that is one of the uranium producers. That's ticker symbol URRE, Uranium Resources. So this thing blew up quite a bit on Twitter. I remember seeing quite a few different traders talking about URRE on Twitter. If you're familiar with Timothy Sykes, actually he was one of the people that was high on it for sure when it crossed its 200-day moving average to the upside. So that was around $1.60 a share. The stock ran clear up to $4, and then Uranium Resources took the opportunity, which makes sense for the type of company they are. Right, they're a junior miner. They're in the mining sector, and what they're trying to accomplish, obviously, is to mine the uranium and sell it off. The one thing that they do quite well, and it's pretty, I wouldn't say it's pretty common, but Uranium Resources does not take out debt. So in order to not take out debt, in order to finance projects, they have to sell additional shares of stock when it makes sense. So Uranium Resources took advantage of their big run up in price, and they announced the pricing of almost $10 million in public offering. So obviously, correspondingly, stock, after running up about 150 to 170% in a few days, they announced on January 13th that they were going to sell almost 5 million shares at $2 and a penny. And again, back to the fact that it had hit almost $4 the day before that, the stock dropped back down to $2.52 the next day. So what's that mean? Well, it's still kind of a wait and see game, but that tells me that the market's still pretty bullish on Uranium Resources if they priced new shares at $2 and a penny, and the company's still trading at $2.52 a share. That means there's a heavy demand to get a hold of those shares at 201, because I mean, you're talking a 25% gain if you get in on that action. I mean, if you get in on the, it's not an IPO, but on the offering at $2 and a penny, and the stock's trading at 250. As soon as you get your shares, you've got $2.50 versus 201. I mean, you've made a 25% gain immediately. So interesting stuff going on there. I mean, definitely, like I said, like we talked about last week, the uranium space is very interesting, and that all that's really being driven by the one company really cutting back on production, and the other one's starting to take off a little bit from there. So with that, let me get into the heat map here, if FinViz will work for me. I want to take a look and see what happened across the market as a whole last week. Okay, here we go. So for the S&P 500, while the heat map's refreshing here. Let's go over and take a look at our 3 systems that we're using. So right now, what's going on so far this year? So we've made 1 trade this year, and that was to sell Greenbrier Companies last week. After it made the big run after their recent earnings, we took all of our initial investment off, and we're going to let the profits run. Other than that, I mean, most of our holdings have been around for quite a while, with the exception, I mean, the 2 most recent are ticker symbol AAON and MGIC. Those have both been within a month, but other than that, everything's pretty much longer term holdings right now. Looking for some price appreciation. So let me get the system pulled up here. So our Quanta Funda Techna system so far this year, it's up 2.99% versus the S&P at 1.6, the Dow at 0.62, and the Nasdaq up 3.5%. Obviously, the Nasdaq's been performing quite well this year so far. Our strictly technical system is up 1.03%, so a little less than the S&P, still beating the Dow, and obviously again well below the Nasdaq. And then our undervalued system, which is really pretty limited still in its ability to track deeper, with only 3 stocks in the system. It's pretty volatile, but you know, obviously for last year it definitely outperformed the market. This year it's at 0.18% so far, so we're definitely trailing the markets. But I think once we get a few additional stocks into that system, we'll find that it's definitely going to continue to be a viable system over the long term. So that kind of covers year to date. Let's pop back over to the S&P 500. Facebook last week up 4%. TripAdvisor 4.24%. So a lot of movement in the tech system again, or tech sector. Cerner Corporation up 8%. Healthcare information system. It's actually one I'm not familiar with, so I might have to do a little more research on that. But it'd be interesting to see. Let's take a look at this. I cannot. There we go. Applied Materials up 5.46%. First Solar 7.3%. Let's see which one. What's the other there? So there's definitely been a lot of positivity in the tech sector, which makes sense, right? Because the tech sector kind of got beat up at the end of the year after the election. I mean, you can't really say under the Trump election, but after the Trump election, you know, tech definitely underperformed. So now they're starting to catch back up with the rest of the markets. So Public Storage Company down 6.23%. We got Bristol Myers down 6.22%. But also in that drug manufacturer sector, you have Merck up 3.44%. So there's a pretty big spread. In the service, Amazon up 2.66%. Let's see where they're hidden at here in the. Okay, the department stores. Macy's down 3%. Kohl's down 1.5% for the last week. Target, Walmart, pretty much all of those down, which makes sense. Other than the one glowing bright spot was with Gap. Gap pre-announced that they had a really good quarter. They had strong fourth quarter sales, so it'll be interesting to see what those final numbers come out at, and how impactful that is. So, all right, just jump to the basic materials group. A lot of red there, a lot of red in the oil and gas, and as oil goes, so that sector is basic material sector is kind of going to go. Utilities pretty much flat. You know, that's kind of that stalwart system or stalwart company where you're just looking to collect those dividends. So you know, pretty much being flat in the utility sector is not really a bad thing. I think that covers pretty much all the bright colors here, other than medical appliances and equipment. Definitely had some high points. Medtronics up 3%. Zimmer Biomet Holdings up almost 10%. So Boston Scientific up 7.5%. So now we've kind of gone through those. What I want to jump back to the main screen here. So this is kind of one of my favorite times of the year. I love earnings season. Today we've got some important earnings coming out today. I mean, you've got United Health before Morgan Stanley is going to put out their earnings before the market today. Let's see who else we got here. Comerica Bank, Bank of the Ozarks, WTR, Aqua America, it's a utility, Synovus Financial. Then after, you've got CSX, so we can get a feel for you know, shipping again. United Airlines coming out after earnings as well, or after close today as well. Interactive Brokers, they are a stock trading website if you're not familiar. And 2 or 3 more, looks like 4 more banks that are kind of the highlights for the rest of the day. So that's kind of it for today. Looks like a lot of banks will be important today to get a feel for what to expect with the other large money center banks. So I think that should cover us for today. If you have any questions, feel free, send me an email, chrism@campfinancial.net. Leave me a message here, YouTube, Facebook, Twitter. However you want to reach out to me, one of those platforms is probably the best. That way I can take a look. If you have specific stocks you'd like me to talk about or kind of research, I will do my best, and we'll be back on Thursday this week since the markets were closed yesterday. On Thursday I'll take a look at the Twitter feed and see what stocks are out there that people are talking about, that they're interested in, that they want to hear about. So that is it. Take care, and we'll see you next time.